Welcome back. Hope you're having a good morning. Get through today, and then you have 3 days of vacation, actually. So looking forward to that. But today you have the big Q. That's the RBI policy meet, and we'll be hearing from the RBI governor in a couple of hours. For starters, though, the ASX is suggesting a bit of a downtick to kickstart trade. Dipan Mehta, director at Elixir Equities, joins us on the show. Hi, Dipan. Thanks so much for joining in. Well, let's focus on a couple of stocks that we just spoke about. Nykaa, they've given an operational update. Yesterday, the stock was higher. I understand there was some selling that got absorbed in the first half of trade, but it ended at the high point of the day. The operational update they've given, though, they're indicating that the fashion business, well, it may not grow as much as earlier anticipated. They're talking about late teens growth. In quarter three, it was up by close to 50%. Your view on the stock at these levels?
Yeah, Nigel, good morning, and thank you for having me on your show. I think that, Nykaa is best to avoid at this point of time. Clearly, a competition also is coming in, as I heard earlier in your show. And the fact that the numbers are a bit tepid, and actually the fashion part of the business was supposed to be the high growth avenue for the company, because they do have a dominant position in the BPC, the beauty and personal care products business, where they had a first mover advantage. Where the fashion business is what was supposed to guide the growth rates much higher, but that seems to be slightly flagging at this point of time. Again, there is no visibility as to when we will have solid earnings coming into the company. There has been some churn at the top level as well, and that's also concerning. And given all of these parameters and all the choices which are available in the other consumer-oriented stocks, we prefer several other businesses which are solidly in profit and generating good return on investment rather than Nykaa at this point of time. You could keep it on your watch list, but making a fresh investment at these levels is not advisable.
Even for the beauty product segment, Sonia, we were discussing this yesterday. Reliance has launched the Tira brand. So they showcased the omni-channel beauty platform brand, Tira, and that was yesterday. So I think we may have a reporter was there. Maybe we'll have some visuals, etc. Yeah. But that's the core of the business, and fashion was, as Dipan said, supposed to be the one which takes them forward, and there is too much competition.
And with Reliance's Agio product, which did really well, right? I mean, that has been hitting Nykaa, giving them competition. Now with Tira, it extends into that arena in terms of beauty, etc., which anyways becomes such a commoditized space. So absolutely got that. But Dipan, good morning. I wanted your thoughts on Angel One. I was just going through the data that came out for the month of March. On a year-on-year basis, their client base has gone up almost 50%. Number of orders have gone up 27%. And the overall business for them has, the turnover has gone up almost 135% in the month of March. I don't know if you glanced through these numbers, but in general, do you like this stock?
Yeah, good morning, Sonia. See, I was very positive on Angel One maybe 2-3 months ago or so. But there are serious headwinds coming as far as the business model is concerned. And one of the biggest threats to discount brokers is the fact that SEBI is trying to make a move whereby the collaterals they receive are directly parked in the same form with the clearing corporation. And therefore, a broking company like Angel would lose a lot of their float income. And we have no clear idea as to what is the float income and how much the revenues are from that particular revenue stream. And unless we don't have some kind of a stability on the regulatory front when it comes to pledging of collaterals, I would like to avoid all discount brokers, including Angel Broking at this point of time. There is no denying that they are a very aggressive player and a quality player when it comes to discount broking. And they have scaled up the business in a fantastic fashion over the past several years or so. They're clearly moving up the value chain in terms of offering more sophisticated products and advice as well. But I think that the float income could be a big part of their top line and bottom line. So there's a great deal of uncertainty around it, and the stock price also is reflecting. I think it's corrected significantly from its peak. So I would keep it on my radar, but I wouldn't like to buy at this point in time unless I don't have certainty as far as this float income is concerned.
No, absolutely. At current multiples, it does seem cheap for a business which has grown pretty fast over the last couple of years. But the future, as Dipan says, is where there is a little bit of uncertainty which is coming through. Dipan, on the market itself, do you think it has it in it to take it forward by a few hundred points more, or it'll start to get shaky legs here? What's your sense?
Yeah, good morning, Prashant. Let the market do its stuff. Every time I think that the market is now ready to move up to the next level, suddenly some news happens or there's a steep correction. It's very difficult to call which way the market goes. There are just far too many moving parts, and we have a RBI meet today. That can certainly determine the medium-term trend. So I wouldn't want to comment on the market at this point of time, but all I can say is that a lot of outstanding businesses now are available at reasonable valuations. And I was seeing one particular chart which said that the premium which in the Indian markets had over the other emerging markets, that has vanished over the past few months or so because of outperformance of other emerging markets and valuations moving up over there as well. So intuitively, I do feel that unless there is some fresh, negative news flow or some googly or something, the markets should try to build on these gains and move up to higher levels. But it's not a high conviction thought at this point of time. But I'm focusing on getting into outstanding businesses which are now available at reasonable valuations, and clearly looking forward to this upcoming earnings season before we start making fresh investments in such businesses where earlier we wouldn't buy them because the valuation, the P multiples were very high. And now because the stock prices have corrected and hopefully the earnings also have moved up, you would have some compression in P multiples, which may provide a good entry point.
Okay. I have plenty of other stocks to ask you about. Macrotech Developers is the other one. The sales have actually declined this time around on a really high base. So Q4 FY22 last year was a record year for the company. So on that base, the sales have declined this time. But more on that in a bit. Dipan, just stay on for a bit.